Hi, good morning. This is Mayor Valensky with Driving Markets. Interestingly enough, anything said in this piece, by the way, is an opinion only. Interestingly enough, two banks or two deposit custodians and two financial institutions saw their deposits shrink. State Street, which is a Boston-based custodian, saw its deposits shrink by $12 billion, and that's caused its shares to drop significantly, and I think by 9% if I recall correctly. And also Charles Schwab also saw $41 billion come out of its deposits, and they caused its shares to fall as well. Now, if this trend continues, then you're going to have all of the second tier banks or the lower level banks see shrinking in their deposits. That's going to cause significant concerns in the banking sector, because those banks and those custodians are totally dependent on deposits funding their operations and obviously for making profits, etc. And this is a continuation of the trend since the Silicon Valley Bank debacle and Credit Suisse and Signature Bank and First Republic Bank, etc. That's to name but a few. There's probably more banks out there that we're just not aware of, are going to come out with warnings that they're going to be in trouble. It's just a matter of time, and trying to identify which bank is going to be the next one out there is a difficult one. And considering last week that JP Morgan, for example, which was a first tier bank, they came out with excellent results and their shares jumped 6%. So the top tier banks, apart from Credit Suisse of course, the top tier banks could be okay, but remember, they're the ones that have funded banks like First Republic Bank, whereby they loaned them $30 billion short term, but we're not too sure how that $30 billion is going to be returned to them. Looking at a couple of other things on the financial markets, and remember I said yesterday, and I've been saying last week, that China could be or is the number one threat to the US. Well, their GDP for the first quarter of 2023 jumped plus 4%. So they're in a much stronger position than the US economically. Remember, they had a pandemic zero tolerance, China flu, COVID-19, Corona lockdowns, and they released those lockdowns. The economy's grown 4%. They're in a much stronger position than the US as far as GDP is concerned, and also the setup of the communist regime, how they report. You can't always trust them because they do manufacture figures, seemingly and obviously that they want to promote the communist regime as the number one leader and the right way to run your life, etc. So you can't really trust the figures, but you can more or less see there's been a significant GDP jump as far as China is concerned. And when it comes to them taking over and ruling the number one economy, pushing the US to number two, and suppressing the dollar, making the dollar the secondary currency in the world, you can see they're probably on the right track. They've got enough reserves and they're holding enough US treasuries to do that. Okay, so they are very, very strong economically, and they're very, very strong financially and politically, and they are making moves into Saudi Arabia and into South America, starting with Brazil, and they're looking to take those peripheral countries, well, not so much Saudi Arabia as regards petrodollars, but they're trying to take those countries away from dependency or pegging to the US dollar as the main currency, and making the Chinese yuan or the Chinese economy the number one go-to economy, number one go-to country. China has got its fingers in every pie, including the Middle East. It's building underground subways, buildings, contracting, etc. And America's very, very concerned as to how far China is going to go as far as economically, and also on an espionage basis, because no doubt you're going to have Chinese listening devices amongst all of their or spy software amongst all of their constructions within the global economies. Foreign exchange, dollar is slightly weaker. You're going to have a continuing weakening of the dollar, well, especially if there's a banking crisis, but you're going to have a weakening of the dollar going forward, as interest rates are unlikely to rise any further in the US because the Fed's scared to push the economy into further recession or cause a further banking crisis. So you're going to have a weakening of the dollar, strengthening of the euro, strengthening of the pound. Dollar yen is going to continue rising simply because rates are zero in Japan. As far as crypto is concerned, Bitcoin fell below the 30,000 yesterday. Don't know why. Could just be an overbought signal. Haven't got any indicators out there as to why it's done that. But those who are crypto traders, Bitcoin, if it doesn't regain its 30,000 level, then it's going to fall all the way back to 25,000. All depends if it goes above 30,000. Equity markets were up yesterday, anticipating good results coming out from Bank of America and other financial institutions this week. Johnson & Johnson's also reporting if you're an equity trader. Regarding bonds, interestingly, US Treasury went up to 3.59% yield yesterday on the US 10-year Treasury, so it crept back up there. Again, all depends what interest rates are going in the US as far as the Fed is concerned. Gold, again, looking to go higher in my opinion, as its oil came off yesterday, but OPEC's not going to allow oil to fall. This is Mayor Valensky with financial market, with driving markets. Have a good day.